Hello, everyone. Welcome to my new podcast. Today we have Rishi from Success Law, and I'll directly go into introduction with you
Absolutely.
now.
Of course, you know me, Udit, Rishi Sharma from Success Law. I am a real estate lawyer. I'm the owner of Success Law, proud owner of Success Law, and I'm here to answer everyone's questions on real estate law, and give my opinion on what it is like in today's world and in the near future ahead of us.
Okay, sounds good. So, what's the best part of being a real estate lawyer?
The best part of being a real estate lawyer are, well, I'll give you two points.
Okay.
Number one, it's the suits. I mean, who can resist the suits? If you're
Okay.
if you're a person who likes suits, well, you'll soon have a closet full of suits that are
That's
probably much too expensive and out of your budget, but it is a good thing to have.
Okay.
But really and truly, the thing that drives me, what I love most about being a real estate lawyer specifically, it's that it's a very rewarding business, and rewarding not financially in a sense. Of course, it is rewarding financially, but more so when you get to see people's faces when they have bought their first home or their 10th investment home, they've sold their property and made a bunch of money. Those kind of things are very rewarding experiences, and it makes me happy to see my clients happy at the end of the day. So very
Yeah.
rewarding.
That's true.
Yeah.
To a lot of clients, I say I know that we don't know each other very well, but by the time we are done with this transaction, you and I are going to be friends.
It's so funny. Just before we walked into this podcast, I got this email that said, you know what, I don't know you very well, but I've been recommended to you, and the person who's recommended me to you trusts that you'll do very good service for us, right?
Yeah.
So absolutely, people come in with that kind of mentality or mindset, and what can you do, right?
It's actually the best part.
Yeah,
of the-
exactly.
Yeah. Okay, so that was the best part. What's the most challenging part of being a real estate lawyer?
What's the most challenging part of being a real estate lawyer? So I would say time management is one of the most difficult things of being a real estate lawyer. As you know, time is money,
Yeah.
right? The more of your own time you can get is also a valuable asset, and the more of the time you can give to your clients is also valuable income.
Yeah.
Right. So having that balance between giving your clients your time, keeping some time for yourself, your family, your friends, and keeping a good work-life balance, it's very difficult. But at the end of the day, I always tell people that especially if you run your own business, you can throw sick days out the window. You can throw days off out the window. You can throw weekends out the window. Everybody thinks when they start their own business or they open up their own shop that they get to be their own boss. They can take time off. They can do this. They can go on vacations. They don't need to request time. It's the total opposite. So difficult. The biggest difficulty would be time management.
I have friends who are employed and they say, you work for yourself. Why can't you just take some time off? Like, the last person that I work for is myself, because I work for my clients first.
Exactly.
Then I have to work for the banks as well, different lenders. And then if some time left, okay, then I get some
Then
time
you give
for
that
myself.
time for yourself. Exactly.
So, yeah. So, okay, I'll get to the next question now.
Yeah.
What is the weirdest question or a request you ever received from a client?
Weirdest question or request I've ever received. Okay. So, of course, I've had one client ask me if I'm getting married anytime soon.
Okay.
All right. Because they didn't ask for themselves, but it seems like they're a matchmaker in their friends' lives. And so they wanted to attempt to do some matchmaking in that sense. But I'm already getting married. And so that ship already sailed. So that was one of the weird questions I got. Another weird question I got is surrounding the contents of people's homes.
Yeah.
So sometimes when people buy homes, they request to buy specific contents of the home.
Yeah.
I've had people put in requests to buy pets sometimes. Pets to include with the home. And I fair say it won't be dogs or cats. I haven't had any, but somebody's put in offers to buy their fish tanks and their pet fishes, things like that. So those are kind of weird things because, people carry some emotional attachment to certain things, and to buy it from them is a little bit odd instead of letting them just carry it away. But I understand. Sometimes things like, make the house look great. make it feel good, make it feel like home. So
Yeah.
why not?
Thankfully, you didn't say a dog or a cat.
Yeah. No, I haven't had a dog or a cat yet. No.
Yeah.
But it's still a pet. I mean, they consider the person actually who got the offer refused, and it was a substantial offer on the fish tank, and it actually cost them money to move the fish tank, get it moved to their new home, and everything like that. So they took those fish as if they were close pets.
Okay.
Yeah. So weird requests do come by, and I wish I had more time to think about that question, because I know I have a ton of weird requests that have come our way.
Oh, that's okay. I will get to the serious stuff too.
Yeah.
So, if you could time travel,
okay,
which year would you like to go to so that you get the best out of Toronto's real estate market?
The best out of Toronto's real estate market. Okay. So right now everybody complains about interest rates.
Yeah.
Okay. And I'm sure you know the statistic, but in the late 80s, early 90s, I believe I might be a few years off, but in and around that time period is when interest rates for mortgages were about 19%.
Yeah.
So a lot of people think that we're suffering from the worst interest rates that we've ever seen. But actually, even if we go back a few decades and you think, you know what, let me try to take advantage of low interest rates, that's not technically the case in the entire history of time over the last 30 years or so. But if I were to go back in time, and I was able to, I would go to two periods. One, right before the pre-construction boom.
Okay.
Everybody knows pre-construction was kind of booming from 2012 to 2018, 19, almost up to 2020.
Yeah.
And that was a great time where I've seen many of my clients turn from first-time home buyers, and all of a sudden, within a few years, they're selling their 10th home. So it was a really great time for investing in pre-construction properties. Appreciation was a driving factor in those transactions. So that's one. The second point I would go to is right before the dot-com revolution, or right before the cryptocurrency revolution.
Okay.
Because I've seen a lot of young individuals who made good money from cryptocurrency, from e-commerce, from the internet, and they've taken that money in order to stabilize it, in order to create some stable future income, residual income.
Mm-hmm.
They put it into property, right? And then they learn about the Burr method, and they take that property and they repeat the Burr method until they've accumulated substantial wealth that doesn't have the same type of volatility where they made their initial wealth, which was cryptocurrency, dot-com, e-commerce, etc. So they go from a very volatile, unstable place of wealth, and they put it then into a stable place of wealth. So if I could take advantage of any of those times, I would take advantage and get my money working for me.
Okay, that sounds good. So, okay, next is, what is the best piece of advice you ever received, whether in law or in general?
One of the best pieces of advice I've ever received, especially recently, it's one that sticks in my mind over the last few years, is that you can't work in your business and on your business at the same time. And I come from a school of thought where I can do everything.
Yeah.
I will do everything, and I don't need anybody else to do anything for me or help me. And a lot of people watching this will probably agree with that same mentality. They probably reflect upon themselves and say, I have that mentality too. Why do I need this guy? I can do it myself.
Yeah.
But the thing is, as much as you work in your business, completing mortgages, completing real estate deals, as you're sitting at that desk and you're giving it all to your client, well, you can't be working on the business at the same time, right? So there's a smaller picture and a bigger picture. And in order to be the salesman of your business, to be the rainmaker of your business, which is pretty much why you're the owner of your business, because you can bring clients in, you can make the sales happen, you can be the rainmaker. So in order to give yourself more time to bring clients in, to be the rainmaker, you've got to get out from being locked in the business and start to work on the business. And how do you do that? You've got to hire help. You've got to accept the fact that you need help. And if you've got enough staff and the right employees running your business, trustworthy employees, intelligent employees, employees who are looking to grow with you and your company, then eventually you'll have a business that runs itself, and you'll have
Yeah.
all of your time back. You can use that time to then create more companies, further branches, further offices, etc. So one of the best sayings I've heard or quotes recently is, you can't work in your business and on your business at the same time.
That's actually very, very true. I struggle with it too.
Everybody struggles with it. Everybody struggles with it. So it's a learning process for everybody, right?
Yeah, that's true. Okay, now let's get to success law now.
Let's do it. Yeah.
So, how and why did you start success law?
Good question. So I worked in downtown Toronto for a few years, about 3 years or so, before I decided to make the jump to my own law firm. I worked in downtown Toronto, and I realized that a few things. Number one, there's more than one way to deliver legal services to a client, right? Just like you have Pineapple Mortgages, and everybody has their own way or brand of delivering mortgages. I wanted to develop my own brand, delivering actually good client services to people, making them happy, and going above and beyond the call of expectation of a lawyer. I realized that the downtown law firm culture is one that doesn't have a lot of upward mobility. And what I mean by upward mobility is that to get to a point where you can have multiple offices, people working for you, income that you can retire on happily. And I'm sure there are spots like that in downtown Toronto on Bay Street where you make $200,000, $300,000, $400,000 per year.
Yeah.
At the end of the day, you will still have somebody who you will call a boss, your boss. And the luxury of not having that is absolutely phenomenal. The luxury of being able to direct business in the way, in the fashion, in the style that you would like to do it is great. Imagine having to, imagine you had a great way of doing something, but your boss tells you you've got to do it your way. It's a very conflicting feeling to have. So, and that is one of the feelings that I have. So I decided, you know what, I'm going to leave the stable income of, the stable bi-weekly, weekly income, whatever it is when you get paid as an employee. And I'm going to make the jump, do this my own way, deliver services that I believe I could deliver a lot better than most people. And after that, I created Success Law. I created Success Law in a time where mortgage interest rates were skyrocketing, and people were getting very, very apprehensive and scared to buy homes. People were shutting down real estate law firms. People were shutting down real estate brokerages. I decided to open up only on the fact that I knew that true, honest, exceptional service will be the quality of character, or the character that survives in this world, in this field. The real estate lawyer that will survive and then eventually thrive will be the one that encompasses a character of honesty, efficiency, truthfulness, and care for their clients. So I encompass that character, and I could say right now, despite all the factors that were working against us, I'm in a very, very grateful and thankful position with Success Law.
Look, if the time is tough, you just have to work even harder. The time will be yours.
Tough times don't last, tough people do.
Yeah.
That's another good saying that I learned. And it's absolutely true. It's absolutely true. Yep.
Okay. So that was great, actually. And so what you explained a bit about why you got into this.
Yep.
But how is Success Law different from other real estate law firms out there?
Very good question. So, and this goes to one of the reasons that I created Success Law myself. I believe there's a big difference between lawyers and trusted advisors. I wanted to become a firm and a person who is a trusted advisor to somebody, and not just a lawyer. A lawyer is great. They're a very intelligent, knowledgeable person that you can call to find out answers about maybe 1 or 2 or 3 very specific legal fields, right? And as soon as 5 o'clock hits, it's going to be tough to get a hold of your lawyer, right? Mm-hmm. A trusted advisor is somebody who's like your brother, your mother, your friend, your great friend from childhood, who you can call at 3 a.m., at 9 p.m. at night, and you know this person will be there for me in a time where I feel urgency, I feel fear, I feel apprehensiveness, and I need that to be addressed. right? I need that to be resolved. And
Yeah.
so that a lawyer doesn't do that, but somebody who goes above and beyond the call of being a lawyer and decides to be, I'm going to be that trusted advisor for you, that is the person who will pick up that call. That is the person who will give you that peace of mind. And that is the person who will put you before themselves in their life. And
That's true.
so that is one of the things that sets us different. Of course, there's a lot of practical things that set us different too, a lot of technical things as well, processes and procedures. But really, the big picture, the heart of what makes us different is we're more than just lawyers. We are trusted advisors to each and every single one of our clients, mortgage agents, real estate agents. They can trust us to be more than just a lawyer.
Yeah, that's like home purchase, like buying or selling. It's one of the most stressful things any person goes through. And
Yeah.
in the beginning of my business, I was like, after 7 p.m., I marked my line. After 7 p.m., I'm just gonna keep my time to myself.
Yeah, it's good too.
I wasn't able to stick to that because when I got like further into it, I started to realize that people are like they're afraid because they haven't seen the process, and mostly first time home buyers because they're going through the process for the first time. The last call that I've taken is at 2 a.m. now. So and I had to. I was like, okay, let me calm you down.
Yeah.
Everything is okay. We're closing tomorrow, and then yeah. But
in the long term, it will
yeah.
benefit you, right?
Yeah.
In the long term, I mean, that's going to be a great Google review. Hopefully,
Yeah.
that's going to be great word of mouth, right? That's going to be a
That's
great
true.
story that they're going to share at the dinner table, that they're going to share at the next dinner party with their friends. And I totally agree with you. You know what? It's funny that you mentioned that because your business, if you're truly passionate about it, should be your life.
Yeah.
And once you get your business right, you'll get your life right,
Yeah.
right? And another thing that you mentioned, your home being an asset. Two things I wanted to mention there. Number one, a home purchase is probably one of the biggest purchases of your life. This is one of the biggest assets, if not the biggest asset of your life.
Yeah.
I have come across many people who will spend tons and tons, hours and days, weeks even, to research the next cell phone they're going to buy, to research the next Apple Watch they're going to buy, to research the next pair of shoes they're going to buy, to research the next hair product they're going to buy. But they will not spend days, weeks, or months researching the home that they're going to buy, becoming an expert at the home. And this is the biggest business asset purchase of your life, or biggest purchase, period, whether it's an asset. And the next thing I wanted to say, the second point is the word asset. Sometimes it tears me up inside sometimes when people use the word asset, because a lot of people, especially first-time home buyers, and even those veteran investors, get confused as to what an asset is. Great, we have a technical term, asset, that you use in accounting. Absolutely. I want everybody to throw away what they think an asset is. And I want everybody to think of an asset as simply one thing. Does it make you money, or does it cost you money? Okay? When you buy your first home, everybody says and thinks, I've got an asset. I've got a $500,000, $1 million asset now under my name. I'm very happy. I'm a high wealth individual now, high net worth individual now. That's not the case, because in most cases, that first home, you will continue to pay into it.
Yeah.
You will every month not make money from that home. You will have to give money. Of course, appreciation over time and over the years, you may be able to get your money back.
Yeah.
But technically, that is a liability to you every month. It is a cost to you every month. If it was an investment property and it was giving you cash flow income every month, then I would say that's an asset, because you're receiving income from it. There's cash flowing from it. It becomes a liability when there is no cash coming out of it, and you're just dumping mortgage money, dumping utility money, dumping common expenses, and hoping that one day the appreciation will be enough in 5 to 10 years to offset and then profit on what you've given.
Yeah.
So really important to know what is truly an asset and truly a liability.
I'm actually going to clip this part separately and send it to a lot of people.
Yeah, absolutely.
This was very nice. Yeah.
Go for it. Go for it.
Let's get on to
technical
mortgage
stuff.
Yeah, let's this is something that bothers me a bit, because I don't want to be a part of a mortgage fraud or anything.
I agree.
And let's first get through the different types of fraud. Okay?
Let's do it.
There's income fraud, there's identity fraud, there's appraisal fraud, and there's different straw buy schemes.
Yep.
So let's just start with I think income fraud is mostly related.
That's
to
the most common one.
Most common one, and most related with mortgages, where people actually inflate their income,
Exactly.
or actually even try to even completely falsify the income. And I'm actually waiting for the government to make the decision that where every lender has to verify the income through CRA.
That would be good.
So because
That would be very good.
yeah, I feel like is the people who actually deserve the houses, like they're not getting
They're
it.
getting,
And
yeah, short end of the stick.
yeah, so and it also impacts the pricing of the houses.
Absolutely.
So I think that would help. But what's your take on?
Yeah, so I always tell people to stay away from two things. If you hear these terms, okay, just stay away from that mortgage person. The first one is cook the books.
Yeah.
You'll always hear a mortgage person, a real estate agent say, oh, is your income a little short? Don't worry, I know someone who can cook the books.
Yeah.
There's no cooking involved in mortgages. You're not wearing a chef hat, okay? There's no chef knife involved. Yeah. Neither do I have one. My tool is my pen and my keyboard, not in the kitchen, okay? So if you hear someone saying cook the books, it's an indicator that they're going to be fraudulently inflating your income, okay? Whether you know it or agree to it or not, because their incentive is to process a mortgage, right? And to make money. And if they're desperate and they haven't been processing mortgages, well, they may, without your consent or knowledge, inflate that income just slightly, maybe more than slightly, to get the approval that you need.
I actually did get a call from someone. It was their renewal time.
Yep.
And I asked them, okay, I asked them about their income. And after I saw the income, I was like, I asked them, how did you qualify for the house in the first place? And then they told me, we don't know. And like, how do you not know? And
it's crazy.
Like, the client had no idea what had been done to their documents. And I asked them, did you pay something extra to the mortgage agent?
An extra fee.
Like, so yeah, he asked me for 2% fee on the site.
And that's the second term.
And I was like, okay, listen. So that was the fee that you paid for him to falsify the documents. And that's even without your knowledge.
Exactly.
So after he was shocked actually.
He didn't even know he was participating in something illegal.
And like I'm 100% sure. Like the reason that he was actually looking for a better rate or something at renewal, but like of course the rates are a bit higher right now.
Yep.
Compared to what they were
a few years ago. Yeah.
But still, like because he actually did not qualify for the home, he was having a very hard time to actually maintain the home.
Okay. So this is this is a very important point to address as well.
I actually felt bad. And I was like, if any time, like when you're going to major lenders, whether it's the top big five or even you're going to something like First National or MCAP, which are the monoline lenders, even they don't have fees.
Yeah, absolutely.
And they pay us, so we don't have to charge them.
Exactly.
So
absolutely.
If someone is charging you so that they can actually make you qualify, that's a big indicator that you will be participating in fraud.
And that's the second term. So the first term was cook the books, stay away from those terms and those agents, people who are using that kind of vocabulary. And the second thing is anything involving some sort of a fee that doesn't seem normal, that doesn't seem ordinary in the course of the transaction. I will say private lenders have a lot of fees.
Yeah.
Right. But if you're not getting a private lender, you should not be incurring any of those 2%, 1%, 3% fees. If you hear something like that, you should dig deep into whether this person is actually doing everything legitimately.
So I'll make the fees clear now. So with big banks or A lenders, so whether big banks or monoline lenders, there is no fee.
No fee. When
it comes to alternate banks, there are two options. Like some alternate banks or B lenders do offer no fee options as well. And like usually there is a fee of 1% to their side.
Yep.
And if the transaction is like very difficult, like let's say a self-employed person comes to me and he says that, oh, I have 7 different bank accounts that you have to look at. Then I might add a fee of my own, but that's is still a legal fee and it won't be as high as 2%.
Exactly, and it's also reducted from the mortgage advance amount.
Yes. So that's still the legal way of doing it. And yes, private lenders, they actually make money on fees a lot.
Yeah, absolutely.
So,
well, if you have to go to a private lender, means you probably don't have many options available if the big banks, right?
That's true.
And then if you're going to a private lender, well, we're going to charge you some fees because we don't have the same institutional or governmental backing security that these big institutional banks do.
Now they are putting their money at risk.
They're putting there. It's like me or you giving a loan to somebody, right? We've got to get them to pay some fees, get their skin in the game. And once they have skin in the game, that's when we can feel like we have some sort of more than just that house collateral.
Yeah, that's true. Yeah. Okay. So that was income fraud. Do you have anything to add?
Yeah. So identity theft fraud. I wanted to just touch base on identity theft fraud because in this ever increasingly world of technology, AI, deepfakes, this will become the more prominent avenue of fraud.
That's true.
Okay. I highly recommend everybody to take a look at their home insurance policies. All right. So if whoever's watching or listening right now, after this, call your home insurance agent. Why do I mention that? Because in today's world, typically home insurance policies carry identity theft protection. And if you don't have that identity theft protection in your home insurance policy, it may be an option that you can add on, an endorsement that you can get added on. Yeah. If that is not an option, I would encourage you to explore other insurance companies or companies that provide you protection against identity theft and fraud. Once you go through identity theft and fraud, your life will never be the same. Yeah. If you thought all the passwords and things that you have and it's tough to memorize them and keep them all under control, it's going to get 10 times harder after identity theft. So you might as well protect yourself, pay a small fee, get insurance coverage, and protect yourself for life.
That's true.
Right. One more thing I wanted to mention, okay? This is something that separates the good lawyers and the normal lawyers, the great lawyers and the good lawyers, okay? A lot of people will get defrauded, second mortgages put on their home, ownership taken from them, whatever it may be. You'll hear cases, the CP24 horror stories, where somebody fraudulently puts a second mortgage on their home, gets the money, runs away, and now the homeowner is on the hook to pay the second mortgage on the property. And you're thinking, what? Somebody frauded this person and they have to continue to make mortgage payments for a fraudulent mortgage? How does that make sense? And the reason that can be avoided is through title insurance. And it's very simple. Title insurance can protect you from almost all of these worst case horror story scenarios, especially the ones involving fraud. I would like to say something very important about title insurance. In Canada, in Ontario specifically, lenders will require you to get title insurance. Your bank will require you to get a lender policy. That lender policy doesn't protect you. That protects the bank. Okay, so they're covering their butts. Okay. The other type of title insurance, it goes in counterpart to the lender policy, is called the owner policy. The owner policy protects the owner of the property, right? It is not a requirement by law for you to have title insurance on your property. I want people to understand the importance of what I just said, because I can go outside right now and buy a $500 car, and I will go to jail if I do not have car insurance for a $500 piece of metal, okay? If I go out there and buy $1 million home, I do not have to get title insurance and I will not go to jail. I can proceed. So for a $500 vehicle, the law says it's illegal if I don't have insurance. For my $1 million home, I can go ahead without title insurance. Of course, you have to have home insurance, which is separate. That covers you through fires, floods, things like that. Not fraud.
Yeah.
The one that protects you from fraud is title insurance. We insure every single one of our clients has title insurance. Another add-on that I want to tell you about title insurance is when your real estate lawyer gets title insurance, and this little bit right here is an advanced bit for any mortgage agent or real estate agent who's watching this, I would recommend them to listen carefully and ask their real estate lawyers that they're currently using whether they do this and whether they know this. When you obtain a title insurance policy for your client, if the home is $1 million, your title insurance policy will be for $1 million. Makes sense, right? The coverage should be full, 100% complete. 10 years down the line, When your home is worth $1.3 million, okay, if you were to make a claim and that claim went over $1 million of title insurance coverage, they will not cover it. So in other words, you get the value of coverage of the price of the home that you bought.
Yeah.
We at Success Law, our firm, we pay for an additional endorsement out of our own pocket that other law firms will skimp out on, will cheap out on, and they will not get the additional endorsements. These endorsements essentially mean that your title insurance coverage, as the property value increases, so does your title insurance value. So does your title insurance coverage.
That's great.
Otherwise, you can be in a case where you're out of pocket $200,000, $300,000 because your property has appreciated. Yeah, and then you're going to blame me, guys. And I don't want that. So it's important to have title insurance. It's important to know and understand what title insurance is, and then to have the maximum coverage. Those 3 points are very important.
Okay, that's good to know.
Yeah.
Yeah. Okay, so we're good with income fraud and identity fraud. Yeah. And let's get to appraisal fraud too.
Appraisal fraud. Oh boy. Okay. So for those, you want to give an explanation, a brief explanation of appraisal fraud?
Appraisal fraud is where you actually show the property's worth to be higher than what it actually is.
Yeah.
And that's another type of fraud. And that's one of the reasons why a lot of lenders now have an approved appraisal list, that you can only get an appraisal done from
these companies or these providers. Yeah.
And other than that, there's no chance they're going to accept any appraisal from it. Yeah. And I actually heard it from a person working in a bank. He said that we also carry a naughty list.
A naughty list? Oh!
Yeah. So
Santa Claus.
That's like the naughty appraiser list. Yeah. So these are the appraisers that we are never going to go through.
They screwed us.
They are banned for
They are bad.
So yeah, so that's appraisal fraud just in general.
Let me speak to why people do appraisal fraud. All right. Let's say you buy. I mean, if this video had visuals with the numbers, it'd be amazing. But I don't blame you if you don't. Okay. But I will explain to people, why do people do appraisal fraud? Okay. You bought $1 million home, or you want to buy $1 million home, either or. The bank can give you a maximum of 80% of that $1 million. They can loan you 80% of $1 million. That's $800,000, right? You do not have $200,000 in your pocket to cover the gap from 800 to $1 million. It's $1 million home. The bank gives you 800. You need 200 yourself. Makes sense, right? That's how you get $1 million. The fact of the matter is, you realize that you don't actually have 200 grand. You actually have 100 grand. And then you think, wait, what if the bank can just give me $100,000 more? But the bank says to you, I'm sorry, it's worth $1 million. The maximum we can give you is 80%. That's 800,000, right? But then you say, no, wait, bank. I got this appraisal, and it says that my house is worth 1.2 million. Not 1 million. They valued it more at 1.2 million, right? Fake appraisal, obviously, right? So now 80% of 1.2 million. Well, 2.4 less than 1.2. So what do we got? 8.6? 9.6, right? So 9.6. So now all of a sudden, you have the money that you need to to complete the purchase of that home. Right? You didn't have to have 200, it's 100. And now whoever's watching this, don't get any bright ideas about mortgage appraisal fraud, because it will come back to bite you in the butt. Now, all of these frauds will come back to bite you in the butt. Okay? The reason I say that is because people have been doing these fraudulent approvals, fraudulent mortgages through whatever means you think are clever. They're not clever. They're not intelligent means. Okay? Because now we see that people started at X interest rate. Interest rates have skyrocketed, and they can't afford to make payments. First of all, they were already razor thin on the line of being able to afford the home in the beginning. That's why they got the fraudulent mortgage, right? And even an extra $100, $200, $300, $400 a month would break the bank for them. Yeah. And now interest rates increase, and they're forced to pay more. It's not optional. You're forced to pay more, but they are unable to. And that is the purpose of having a proper mortgage qualification. To know that if these interest rates increase, will I still be able to afford my home? Or will I be defaulted in 3 months and thrown out to the street with my children? So these frauds really just end up coming back to bite you in the butt.
And I feel like these rising interest rates and everything, like it's one of the reasons that we are seeing a lot of inventory in the market too.
Absolutely, exactly,
So a lot
right?
of people cannot afford the homes they are in right now, and they're just selling them. No option.
Exactly.
So
A lot of people got into pre-construction thinking that it'd be easy to get a mortgage approval, and
yeah,
now stress test has changed, qualifications have become more stringent, and all of a sudden people have to leave those properties now. So it's unfortunate.
yeah. One thing I would also like to touch on is that when you discuss the two terms like cook the books or if there is an additional fee,
Mm-hmm.
I have even seen people who actually do qualify for a mortgage, but
Mhm.
because they went to the wrong professional,
Mhm.
and the professional goes like, okay, like I'll charge you 2% fee for this
Okay.
because you don't qualify,
Okay.
and then I'm going to complete the transaction for you, and it will be all done. It has happened in the last 1 month. It has happened to me thrice.
So that means
That someone comes to me and I tell them that you actually qualify. Like I tell them,
legitimately.
put a finger on a bank where you want to get qualified at, and I'll do it for you.
There you go.
And completely, like legitimately, like I don't do any of that stuff. So like, and they are actually shocked. And then I actually show them my system. Like, look, this is what the ratios look like how we qualify.
Yeah.
And this is what your ratios are. You actually qualify easily.
Which that's a big factor because a lot of people, especially in our community or in minority communities, are not very knowledgeable about
Yeah.
mortgages, mortgage qualification processes, stress tests. They don't really know the details of what it means. But that also means that they're very scared of the process. They think it's a very fearful, scared thing, and they're probably not going to be able to make it legitimately. And so they tend to, even if they do qualify and they can make it legitimately, the kind of aura around mortgage qualification has pushed them away. Yeah. So
I've seen some good people go down that road, and
Yep.
we really didn't have to.
You didn't have to do it. And it's these mortgage agents who are, not so great and just want an extra fee, pushing people into situations that are not right for them. And then those people never come back to you for renewals. They never come back to you for future business. They never recommend their friends or family, and you're shooting yourself in the foot.
I did another podcast with a real estate agent, and he said that it's you who have to decide whether you want a smaller fish or a bigger fish of the business. So
Exactly.
if you just want to go through the wrong side of the business, you'll get the business once, but you're never getting it back again.
Do you want short-term riches or long-term wealth?
Yeah, so this is, and the business we are in, it's all about referrals.
Absolutely. It's all about long-term, being in here for the long game, right?
So the last type of fraud that I have for you to discuss is straw buyer schemes.
Straw buyers, yeah. Okay. So straw buyers are essentially two types of people, or one type of person you can categorize it as. It's a person who is not really the end user of the mortgage. That's who that person is, the straw buyer. Somebody who's sitting in place of the real person, right? Like a scarecrow, so to speak, right? Why do people become straw buyers? Well, how do we get fraud from straw buyers? Well, number one, let's say I don't qualify for a mortgage. Rishi Sharma, I don't qualify for a mortgage. I say, Udit, you know what? Let's get your name on this agreement. I know you qualify for a mortgage. Let's get the mortgage in your name, but the beneficiary is me. I'm the end user beneficiary. Essentially, you're the straw buyer. You become a straw buyer now, right? I can then end up screwing you over, doing all sorts of fraud, and the whole world is open to me now because you put your neck on the line for me, okay? The other type of fraud that happens with straw buyers is purchase price inflation. So you may have heard or seen schemes where people who are familiar with each other buy and sell the very same property and continue jacking up the price until it's at a price that they'd like it to be. It's actually a common method that used to be used, and I believe is still used by companies who I won't name, American companies mainly, especially now. If everyone does their research, it's not hard to find their names. But they are essentially buying up block after block, area after area, and essentially raising the market values by area by doing straw buyers who are inflating purchase prices. So I buy a property, right? I'm not really the person who's going to buy the property. I buy for 800. Next month, sell it to you. You're my friend. You buy for 900. We're friends. The money is just going in between us. The next month, you turn around and sell it for 1 million, right? That's where we stop, right? We've inflated now the price by $200,000, right? Then we can go sell it to the real person that we want to sell it to, or we can go refinance the property at a much higher purchase appraisal value.
That's true.
So we've just defrauded either the bank out of extra funds, money from the advance, or we've defrauded some person into paying a substantially larger amount than they should have. But that's why you need a good real estate agent. That's why you need a good lawyer to see, is this in line with comparables? Is this normal? The lawyer will tell you how many times title has changed hands in the last year, 2 years. Is that normal?
Yeah.
Mortgage agent will tell you how many mortgage applications have gone through on this address. Things like that. So if you have the right team of professionals, you can avoid that. The case of straw buyers is actually more so in rental cases. You will see fraudulent property managers, straw property managers, straw rental agents who go around touring properties, getting your rental deposits. You call them back, and they never actually worked for the property management company. They never worked for the building. People will go on vacation. Students will go back to home in their summers, right? 3 months away from their homes or rental places, and people will gain access to the property, pose as the rental management person, collect deposits, and leave. So there's a big rental deposit fraud scheme going on as well, and that's through use of straw fake people, right? So on both sides, on the mortgage side and even on the rental side, you see this kind of crazy stuff going on. Just do your homework, have the right team around you.
Okay, let's get to the next part now.
Yeah.
This was great. What are some red flags or common signs you look for when you start working on a transaction?
Red flags or common signs. One of the biggest red flags I see, or I try to look for, is I always try to create a story of this property. So as lawyers, we do what's called a title search. Yeah. And the title search would essentially tell you the ownership history. It's like a Carfax for homes, essentially, right? So we will read the history. A good real estate lawyer will not just read the lines and see this is okay, that's okay, this is okay, that's not okay. A good real estate lawyer will create a story. They'll say, okay, you know what? Martha bought this in 1950. She sold it over to this person, got a mortgage here, and you'll realize the story about how this home was created and how it ended up in the hands of the client that you're currently or will be servicing. And if the story doesn't add up, you'll know quite quickly. If all of a sudden the story was going good, normal, and then the last couple of years, the title's changed hands about 8 times. There's been about 5 different mortgages. Well, these are all flags, right? If you see the person that signed the agreement of purchase and sale has 4 names, a first, middle, last name, and then you pull up the title and the homeowner only has 2 names. Well, this is another red flag, right? So there's a lot of red flags that lawyers can look through. The good lawyers will always try to create a story of the property and of the history. And that was a perfect time, right?
So
we come back?
I think we'll have to stop and come back.
Yeah.
Some tips or best practices for people to prevent or protect themselves from fraud.
Fraud, okay, good. Best tips or practices. Preparation, prevention is the best medicine, okay? Usually people will take these fraudulent avenues and methods of getting mortgages because they're under a lot of pressure. Because they don't have another option available to them. So what does that mean? You're going to do what you're going to have to do sometimes in life. And that's why some of these things happen. So in order to prevent those kind of things, preparation is key. You've got to take a look. What is your credit score? What is the credit score I need to buy the home and qualify for the mortgage that I want? How long will it take me to attain that credit score and then maintain that credit score? So these are the things, preparatory things, that don't happen 1 month before you start to go into the home buying process. They happen years before you go into the home buying process. Paying your taxes. Having income on paper. I know there's a lot of business people who say, I don't have any income on paper, this and that. Well, get it on paper. Pay your taxes. Start to qualify for a mortgage. Speak to your accountant on whether you should be getting dividends or a salary, as an employer of your own company. Speak to your, wealth managers, estate planners, anything that you can think of. You need to be prepared in the best way. Number one is financially, and number two are the auxiliary items, the other items, your credit score, your expenses, future expenses. A lot that is one thing actually I want to touch on, future expenses. A lot of people will say, you know what, I'm prepared now.
Yeah.
Are you prepared for an emergency? Are you prepared for a contingency? Are you prepared for a child? Are you prepared for your mother and father who may take a financial term in their life and become now a responsibility of yours? And then all of a sudden, your mortgage payment becomes very difficult to be able to attain, right? The credit score becomes difficult to attain. The down payment that you need, another one, right? You don't get a 20% down payment overnight. It takes years of scrimping, having a budget, planning, reducing the luxuries of your life, taking sacrifices. If you want to buy a home in today's world, you will need to sacrifice a lot of things. Yeah. You will need to, Uber Eats, get it off your phone. And that's not a huge sacrifice, but that's a sacrifice that some people are not willing to make in today's world in order to attain home ownership. And there's much larger sacrifices that you will need to make financially and socially in order to attain home ownership.
Yeah.
So prepare. Think of your finances. Think of your credit score. Think of your future planning, and then think of what it costs to get that all together.
Yeah, that's true.
Yeah.
So the last part of this section, how severe are the penalties if someone commits a mortgage fraud?
So I wish the penalties were more severe. Yeah. Okay. The penalties, in my opinion, the penalties are there to deter people, right? But if the penalties were harsher, there would be more people deterred.
Yeah.
Especially on the facilitator level. The facilitators of mortgage frauds, hate to say this, are me and you. Well, not really me and you, but mortgage agents and real estate lawyers.
Yeah.
Right? And real estate agents too, the guy who's not in this room right now, right? And should be speaking on this topic the most. But really, we are the role players that make those things happen. Sometimes knowingly, most times unknowingly. Okay? So that is a key point in understanding, the answer to that question there. So that's what I would say. Yeah.
Okay. Now, for the next part, it's just a few questions. You don't have to be very elaborate on these ones. This will be just quick questions for you to answer.
And rapid fire.
So that's the type of a rapid fire.
Rapid fire. Okay, I love it. You're getting a lawyer to think on the spot.
I think you'll be good, but see.
Let's do it.
So what is the most so for the audience, this is just gonna be a 2-3 minute quick questions. If you need any more details on it, you can actually
be brave with your questions. Don't worry, I'll answer any question you have.
So what is the most common type of mortgage fraud?
Income fraud, income fabrication.
Yeah. Okay. What is the most viewed lawyer-related TV series in Canada?
Suits, easily. I've seen maybe 10-20 minutes of an episode.
Okay.
It is not like a lawyer's life, believe you me. For anybody who's listening right now, another lawyer will tell you Suits is not how a lawyer's life goes. But there are a small percentage of lawyers who do live pretty similarly to that.
Okay.
Yeah.
I've seen it actually 3 times, the complete series, and
3 times.
3 times.
No,
so it's actually my pastime. If there is a series that I get comfortable with, it just keeps on playing, and I keep working on my things.
Oh, okay. It's the background. It's just white noise.
Noise for me.
Yeah, exactly.
So the thing that I have seen in that, okay, this looks good. This doesn't look good.
Yeah.
So quickly they determine everything. So
imagine that was my due diligence process.
Yeah.
Looks good, guys. Here's $5,000, please.
That would be great. That's why they were rich in that.
Yeah, exactly.
So, okay, so can a buyer or a seller back out of a deal if they suspect fraud?
Yes. So the only reason you can back out of a deal is for once you're in a deal, there are no conditions left in the deal. You guys have both signed, all sides have fulfilled conditions. We're in a solidified, a crystallized contract. There's no going back now, right? But all of a sudden now you feel, I think this guy's committing fraud. It is a reason for you to be able to stop this deal. Okay? The reason for that is because there's only one thing that can stop a real estate transaction once it's crystallized. And that is what we call issues that go to the root of title to the property. If the issue goes to the root of title to the property, then the transaction can be stopped. And there's more details on that, of which we won't go into now. But there is an opportunity there. You have to be very certain, have some evidence, and make it provable that this is 100% fraud or going to be fraud, right? And then you would have to contact the law society, the authorities, your lawyer, and the appropriate measures would be taken to stop the deal or to verify whether the deal is going to be a fraudulent outcome.
Okay.
Yeah.
My next question is, who is the best lawyer in Toronto?
The best lawyer in Toronto. I mean, as a lawyer, it's hard not to say myself, right? But I think this is a good question that a lot of people ask, because when you're on Google, you're always looking for the best, right? The best lawyers, the best auto mechanics, the best chefs, the best burger place, the best everything, right?
Yeah.
So I say this. The best professionals are the ones that, number one, know what they're doing, very highly intelligent and experienced.
Yeah.
And number two, they treat you well.
Yeah.
Okay? Because as a real estate lawyer myself, I would recommend anybody who is watching this, if you need advice on real estate or real estate law, I am the person to go to. Definitely. Okay? But then if you come up to me and say, Rishi, who's the best guy you've got for criminal law? I'm not going to put my name out there, right? I don't do criminal law. That's not what I do. I'm not in the courts prosecuting or defending criminals, right? I also don't do immigration law. So I would recommend you to the best people that are in those respective fields. And you should always work with the best people in the field of choice or the field at hand, right? So just work with the best in every single topic, field, area of life that you have.
Okay.
Yeah. So if it's real estate, you should be thinking of Success Law and Rishi Sharma.
Okay. My next question, who is the best mortgage agent you have met?
Okay. So the best mortgage agent. Since I'm on your podcast, and there's a menacing man standing outside right now who looks like he's threatening me if I don't say the right answer. Kidding, guys. But I'm going to say you're a phenomenal mortgage agent.
Yeah.
There's a ton. As a real estate lawyer, we come across phenomenal mortgage agents, right? Udit, you are in the top tier of mortgage agents. And once you're in the top tier, you don't really need to be worried about who's the best. And it's the same thing that goes for real estate law. Once you're in the upper echelon of what we call, once you're in the Olympics, it's a matter of first place being here and second place being right there, right? When you look at the time, it's 9.91 in first place and 9.90 in second place.
Yeah.
Catch me on another day and I would have won that race, right? So to say who's the best, it's tough. Of course, it's going to be the people who are the most experienced and most knowledgeable, which, by the way, I'm very surprised at how much knowledge that you have and experience that you have already. It's huge. It's really big. And you're at the top of the game, volume-wise and quality-wise as well. Because a lot of people think that, I do a lot of mortgages. I'm the best, right? They'll write at the bottom of their little signature in their emails, top volume mortgage agent or da-da-da. How many great Google reviews do you have? So what is your measure of best? My measure of best is a little bit different than everybody else's. It's not all numbers. It's not all outcomes. It's not all data. And I think I group the best in a way that's appropriate to me, and you are definitely in there. Yeah.
Thank you.
Yeah.
For me, the best is like the service.
Service, exactly.
If you are someone who can provide the best service, you are the best.
I agree.
And for every client, it's a different type of service.
Exactly.
You cannot copy the same thing on this other person.
Exactly. Yeah.
And I'm surprised you brought the Olympics analogy. I was actually in the gym and I was looking at run at
Yeah,
a race,
race. Yeah,
and like 10 people running,
yeah.
and I see like the person who did not win, one of the person was actually crying.
Did not finish. DNF. Yeah,
So like, even if they did not, they're still one of the fastest runners in the world.
top 10.
So
They beat
like,
6 point something
yeah,
billion other people.
yeah. So
That's not
like,
bad, right? Even
not
if you
bad,
if you can't call yourself the best, right? You didn't win that race number one. But
Yeah.
come on, there's not very many people in the world that can say they're better than you.
Yeah.
You're in the right place. You're in the right race, and it doesn't get much better than this.
Yeah,
So
it's such small margins.
yeah, exactly, and that's what I think everybody should be focused on: not being the best, but just being in the group of the best.
Yeah.
Yeah. Some days you'll win that race. Some days you might lose by a second.
Yeah.
It's okay.
All right, that was actually good. So no live audience. That's why we have to do it for ourselves.
Yeah, exactly. That's okay. That's okay.
Okay. So next question: what is the difference between joint tenancy and tenancy in common?
Ah, beautiful. I love this question. Okay. A lot of real estate lawyers don't explain this to their clients, right? They just position them into the most common one, which is joint tenants. So I'm going to call joint tenants option A, and I'm going to call tenants in common option B. These terms refer to the style of ownership one can have when they buy a property. So if you buy a home, you can have different types of ownership. Option A, the first type of ownership, is called joint tenants. And the word tenant has nothing to do with you being a renter. Okay, just everybody just pretend the word tenant was not even there. Just call it option A.
Yeah.
It's joint tenants in a technical term. There's two main features or two main characteristics that I like to point out about joint tenants. So number one, well, three. Number one, you cannot be alone on title as a joint tenant. Okay, so if you're the only person that owns the property, this conversation doesn't really matter to you. Okay, this conversation about joint tenants and tenants in common is when there's two or more people who are owners on the property. And it'll make sense when I explain the two features. So joint tenants, number one feature I always like to bring out and highlight is that me and you, let's take this example. We own a property as joint tenants, okay? If you were to pass away, I automatically absorb your interest in the property, okay? The surviving person absorbs the passing person's interest in the property. You do not need to have a will. You don't need to go to court, really. You don't have to go through a long-winded probate process at a time where your family is probably going to be having a difficult time in their life. That's not what you want to do, right? So that's one characteristic, and I think it's an advantage to have. The second characteristic is that we own this property. You own 100%, and I own 100%. You don't own 50%, and I don't own 50%. No. You own 100% and I own 100%. I know mathematically that's not the best logic. 100 and 100 is 200.
Yeah.
But in the eyes of the law, that's how we see it. Okay? So those are the two features of joint tenants. Let's compare that to option B, tenants in common. Tenants in common, number one, we would have to agree on a percentage ownership. Okay, that's the first. So it would have to be 50-50, 60-40, 70-30, 90-10, whatever we agree on. Okay, so that's the first thing. Number two, if you were to pass away, I do not automatically absorb your interest in the property. Okay, so if you were to pass away, it's not automatically I own this 100% now. No. Your interest, your share in this property will end up going to whoever you directed it to in your will. Yeah, why is this problematic? Number one, I'd have to hope you had a will. And if you didn't have a will, well, that means you passed away intestate, and the government's going to get involved more than they should. Let's just say that, okay? If you did have a will, in the good case scenario, you did have a will, I would have to hope that you gave your interest in the property to the right person. Maybe me, maybe your brother, mother, sister, and not somebody who I would have a conflicting relationship with in the management of this property or ownership of this property in the future. Okay. And also, your family would need to spend a lot of time and a lot of money paying a wills and estates lawyer and going in court, probating that will, find the will, hire a lawyer, probate the will, go through court, go through that whole process, and then the person who you named in the will get the interest. So it's a very long-winded process, technical, and it's mainly used. Option B is mainly used in scenarios where you have people who don't have tight-knit relationships with one another, right? So third-party investors, arm's length transactions, right? We have to keep an arm between each other. And joint tenants are used primarily married couples, brothers, sisters, mom and dad, where the relationship, they know when one person passes away, the other person gets it all.
I'm going off topic, but
Yeah.
one question that I get from some group of friends mostly, that we are looking to purchase a home together, and I do tell them that it's recommended that you go for tenancy in common.
Okay.
I tell them that.
Fine.
And,
Yep.
correct me if I'm wrong or anything.
It depends. Every circumstance is different.
Yeah.
Big thing you have to look at is the relationship amongst the people, right? Tenants in common will help you to mitigate risk. Okay? But there are other ways that you can help mitigate risk, right? Co-ownership agreements, cohabitation agreements. These basically detail the relationship, the ownership parameters between one another person, right? And another thing I would say is that a lot of times your recommendation falls by the wayside because the lender will tell you these people must be registered on title as joint tenants. Mm-hmm. So sometimes you may not have an option because your lender may force you to go with one over the other. But when you do have an option, you have to look at subjective circumstances, the relationship between the parties, the history between the parties, the potential for future risk and future conflict, and then address all those things. So very case-by-case basis.
Okay. Thankfully, my last advice is always talk to a lawyer.
Yes, exactly. That's the best advice you can give as a mortgage agent or a real estate agent. Yeah. Say what you want to say, then say you should confirm this with Rishi Sharma.
Okay. All right. So next question.
Yep.
Why is the review of status certificate important when it comes to condos or townhouses with maintenance fees?
Yeah. So what is a status certificate? So for everybody who's out there right now, when you buy a condo or a townhouse, basically any property that has a common expense component in it, what we call common expenses, condo fees, maintenance fees, common element fees. By next year, they'll have a new term for the very same amount that they refer to. I don't know why they have so many terms for the same thing. But anyways, the status certificate is basically a document, a set of documents actually, that shows you the financial health, or really just the health of the condominium, if you want to look at it and posit it that way. It'll tell you how much common expenses are paid or are to be paid on a monthly basis. It tells you if there's any arrears in common expenses, right? It'll tell you if there's any litigation going on within the condo. It'll tell you if any special assessments are upcoming or on the horizon, right? Okay. Or still need to be paid. So there's a lot of things that it will tell you that will essentially give you an idea or understanding of where your common expenses are going in the future, how drastically they will increase. Every year, your common expenses should increase by about 5% anyways. Mm-hmm. Sometimes some buildings have really substantial increases. So it helps to get a picture of the health of the condominium, the financial health in particular. And if all of those things look good and the condominium is being run like a business, which it should be, condominiums need to be run like businesses, right? They need to be making money. And if that is the case, then you're probably in a better case scenario than condominiums that are mismanaged. Yeah.
Are you looking at more condominiums being mismanaged right now than they were?
Yes.
Being prior to the interest rate hikes?
Absolutely. So the one major reason that condos are mismanaged is because they don't manage the budget, reserve fund, or overhead expenses correctly. Okay? And then when all of a sudden you have an unexpected major repair or cost, you don't have the reserve fund to be able to pay for that cost. Every 5 or 10 years, you'll have a flood. You have a parking garage repair that needs to be done. Piping needs to be changed. Who knows? You'll have something major within the condominium that needs to be replaced. And you have a few options. If you budgeted correctly, you should have a contingency fund, what we call a reserve fund, so that if that day comes up, there's a pocket of money, there's a pool of money that can be used towards that. But if you've mismanaged and you haven't built up that reserve fund, or that reserve fund was used recently, and now another major repair came up quite quickly, well then, where are you going to get the money from? There's only two ways you can get that money. One, you can raise the common expenses for everybody in the building, right? I've got to pay $500K for this major repair. I don't have it in the budget. Where do I get the money from? Well, raise the common expenses and we'll make our $500K, right? We'll go get a loan, raise the common expenses, and the common expense increase will help to pay the loan until it's done. Or the other thing I can do is a special assessment. And a special assessment would be a one-time lump sum payment from everyone. I would say everybody in this unit, in this building, has to pay me $5,000 or $10,000 depending on the size of your unit, and I will take that all as a lump sum and use it to pay for the major repairs and costs. So if you see that your condo corporation is not increasing your common expenses, you should actually be scared.
Okay.
If I was a condo corporation, I would raise the common expenses every year by at least 6%. Because what is inflation? 6%. Yeah. So if I don't at least count for 6% inflation, my condominium corporation is now losing money. If my condominium corporation is losing money, that means I'm going to have to go back and ask my unit owners in the future to recoup me on the money.
Yeah.
So mismanaging is getting a little bit more prevalent. It was more prevalent before. I think it's cooling down now because people are getting more into books and seeing numbers and seeing actuality of the reality of the situation. So really important to know your status certificates, to know your health of the condo building, and all this stuff here, it's probably going to be right gone over the head of all the viewers right now. Well, that's the reason why you hire a real estate lawyer, because they breathe this, they live and breathe this every day. And for $200, $300, they will literally take a look at hundreds of pages of status certificate documents for you and give you their legal opinion on what exactly is going on within this condominium building, not just within the unit, but within the building itself. What's going on? Right. So
that's good. Okay. Next question. Can a lawyer advise on a buyer on how to negotiate during a purchase?
Yes. So the lawyer can give advice on, I wouldn't say how, yes, how to negotiate. Sure, lawyers stray away from that. How to negotiate would be more like negotiation tactics of, tone of voice, things like that, how you want to offer things, positioning. Those things lawyers tend to stray away from. And real estate lawyers, they're good negotiators, but real estate agents, they're the best negotiators. They do it every day, and they do it in the context of buying and selling homes. So they're the best. The part where we come in the negotiations is when we're trying to word a clause or term a little bit more nicely, maybe a little bit more strongly, and then the negotiations can change. Because if the conditions and the terms are more lenient, well, that helps negotiations sometimes, right? And if it's more strict, well, that can deter negotiations sometimes. So we can help with negotiations in a legal way. When it comes to real negotiations, like, street-style negotiations, I mean, you've got a real estate agent to help you out with that.
Yeah, that's good. Yeah. And my last question is, what is the legal age to purchase a property in Canada?
The legal age to purchase a property is 18 years old in Canada. You've got to be an adult. And what we consider to be an adult in Canada is a person who's 18 years of age. You can buy a property. You can actually, before becoming 18 years of age, you can become the beneficiary of a property through a trust, and even earn income on a property from being a beneficiary of a property, which a lot of affluent individuals in our society do. It's a way that they retain ownership of the property, but still have their kids benefit from the property, right? So
that's nice.
18 is the age that you've got to be to buy a property. And if you've got kids, by the way, this is a great time. If you've got kids, reminder, first-time home buyer savings account.
Yeah.
Right? Start that. Put money in it. It is a great account to have for your child.
That's a good advice. Thank you. And we're coming to the last part now.
Yep.
So what does the process look like? What does the process looks like when someone works with Success Law?
Yeah. So, you know what? The Olympics is going on right now. And I think the Olympics serve the perfect analogy. When I started this firm, I thought of the entire real estate process from a big picture standpoint. And I realized that real estate law, buying a home, selling a home, mortgaging your home, doing a title transfer, whatever you're doing, it's all really just one big relay race. And it's funny because relay races have just, we're at the end of the Olympics and everybody was tuned in. In our world, the first person in the relay race who starts the race is the wonderful real estate agent, right? They're on the front lines, showing you the homes, taking you to the places, completing your listing, staging your home, whatever it is that they're doing. They start the race, right? They've got the baton in hand. They then run. And once they found their client a home or they found their client a buyer, they say, Udit, here's the baton.
Yeah.
Then the mortgage agent, yourself, you come in, you grab that baton from the real estate agent and you start to run and try to get this person the best mortgage that they can. Once you get to the end of your segment, you're going to pass the baton on to an insurance agent or an accountant, depending on if you're buying or selling, right? Yeah. The third person in the race, if you're buying, is an insurance agent. Make sure you're covered for fires, floods, things like that. Yeah. Your investment, your asset, the biggest one in your life is protected. That's the insurance agent. And if you're selling a home, it's your accountant who makes sure you pay the least amount of taxes on the money that you just made. So the third person in the race, insurance agent or the accountant, depending on if you're buying or selling. Guess who the last person in the race is?
It's the lawyer.
It's the real estate lawyer.
Yeah.
The whole crowd, the whole stadium is looking at the last person in the race to make sure that the three people behind them who put in so much work and did everything so perfectly, it would suck if that last person in the race dropped the baton, right? We actually need them to be the best, the fastest runner. They're what we call in running the anchor, right? That's where we come in. We make sure that we take that baton from you guys and we run it as hard, as fast, and as efficiently, as smoothly as we can to that finish line so that everybody behind us who put in all that effort, all that work, it doesn't fall to the wayside. And the stress that you thought you would have had is now eliminated. So that's how we see real estate law. As a team of professionals working together, passing the baton to one another in a smooth, efficient, quick way so that you can get that baton, not our baton, it's our client's baton. And we've got to get it to that finish line and get that gold. So that's how our processes work. We posit our processes on working with the other professionals in your life and ensuring that it's the smoothest, least stress, the most stress-free processes we can provide to you is what we try to do. So we see real estate law as a relay race.
Yeah, that's nice. Yeah. Do you have any final tips or conclusions?
Oh yeah. So I just wanted to say what's in store for us in the future. Okay, I'm one of the small percentage of real estate lawyers in this country who's actually not only a Canadian real estate lawyer but also a U.S. real estate lawyer.
Oh.
We will actually, so we can actually provide advice on Canadian real estate law and U.S. real estate law, okay? We are going to be opening up our next office in Q1 of 2025.
Oh, nice.
In New York State.
Oh, that's nice.
So we will be becoming officially a cross-borders real estate law firm. So that is what our future has in hand. Right now, we're building our firm in Toronto, as you know. And it's been a great few years in the business so far with Success Law. Nice. Look out for our expansion, Success Law crossing the border onto the New York side of the border, Q1 2025.
That's great. Yeah. So yeah,
good to go.
I'll just say
conclusion. Yeah.
So our contact information is going to be below. If you want to reach out to Rishi, you can directly. And hopefully you find this whole podcast very informative. And thank you so much for joining me.
No problem. If you guys have any other questions about what we talked about or discussed, reach out to me, Rishi Sharma at Success Law. We'd be happy to chat.
All right. Sounds good.
So, surprise segment, okay?
Okay.
If you're still watching and listening. So, as Udit has invited me as a guest on his podcast so kindly, I've also brought him a gift. So, within this gift, within this box
Thank
here,
you so much.
There's just a few treats to make your life a little bit easier in the mortgage world. And hopefully you'll remember success law
Oh,
a
of
little bit more
course.
now as well. So
Yeah.
appreciate you having me,
Thank
Udit.
you so
Thank you
much.
for having me as a guest. And for anybody who needs real estate lawyer, real estate law advice, real estate agents, mortgage brokers, success law is the place to go.
Yeah. Yeah. All right.
Cheers, guys.
All right.
Awesome. Yeah.